This content is brought to you by Uphold, which is a great platform that makes crypto investing easy. You can buy, sell, trade, and earn cryptocurrencies on Uphold. They have 10 plus million users, over 200 plus cryptocurrencies, and they're available in 150 countries. I personally use this platform since 2017. They're one of my go-to exchanges. They also offer equities and precious metals that you can invest in. If you'd like to learn more about Uphold, please visit the link in the description. Welcome back to the Thinking Crypto podcast, your home for cryptocurrency news and interviews. With me today is Gareth Soloway, who's no stranger to the show. We're going to talk about the Fed, the markets, Bitcoin, and much more. Gareth, great to have you on. Happy Friday.
Hey, happy Friday to you, and thanks for having me back on.
So, Gareth, the markets, it's never boring, especially with the Fed and all that's been going on. I would love to get your thoughts on the recent statements from the Fed and what they're planning to do with rate hikes. We know it's in smaller increments of 25 basis points, but they could go higher if inflation continues to get out of control.
Yeah, so there's no doubt that they're starting to kind of come to the end of their hike cycle. But I think what investors may be misreading right now is not hiking rates doesn't mean lowering rates. And I think that's one of these things where we've seen quite the rally, and we saw in cryptocurrencies recently, in the stock market, as the Fed was kind of coming to the end of this. We obviously know Jerome Powell recently said basically that, and the markets ripped to the upside. But I think at this point, smart money, I'm seeing a lot of distribution from big institutional sellers. It seems like they're using this to unload into the retail crowd, and that should be a concern for every retail investor.
For sure. So do you see this as like a bear market rally, both for the stock market and crypto?
Yeah, I do. I really do. So some of the signs, one of the things, and this is a psychological aspect of trading, is that we always try to relive our past glory days, right? So when we think about what we've seen recently, we've seen some of these altcoins rip up 100%. We've seen Bitcoin take off, people getting so bullish so quickly, even though if you look at where the chart was on Bitcoin at 69,000, a bounce to 24 is not really that big of a move in comparison. And then you look at some of these stocks that have run. I mean, Coinbase ran up from like $30 to $85 in a few weeks. I mean, just an incredible move. We've seen Tesla stock go parabolic recently. And what's going on here is as we've gotten this January bounce in the market, a lot of retail investors have gotten very bullish, thinking it's going to be a repeat of 2021. The problem is we have different things, right? So in 2021, interest rates were zero, the Fed was printing money, and the government was sending checks out to most Americans. Now we have 2023, interest rates are 5%, which again, remember, sucks money out of the system. There's no quantitative easing, and the government obviously is not sending checks out. So I think investors have to be very, very careful here. I've seen many bear market rallies. This has all the earmarks of another bear market rally.
Yeah, I've seen guys like Michael Burry sharing the 2000 chart, if I'm not mistaken, showing that bounce and then a rollover.
Yeah.
Are you over the same mindset as well?
I am. And one of the things that I've learned is that bear market rallies there's a term for it, and it's called rip your face off rally. It's like so intense. And that's the way bear markets are. You have these reflex rallies that are really intense and unbelievable. And they really pull at your emotions to make you want to go bullish. And you just see things keep going up and up and up. But again, you just have to step back and look at the bigger picture. And if you go to the weekly charts, the monthly charts, this does have the earmarks of basically run-of-your-mill past bear market rallies.
Maybe you could share the charts, and we could start with the stock market and what you're seeing and expecting as well. So question for you, in addition with sharing the charts, do you see this rollover happening in the next 2 months? What's your time horizon for that?
Yeah, absolutely. So here we have the chart of the S&P 500, right? And again, what I think investors are really queuing off of, there's a couple things that are bullish in the near term here. So number one would be basically the fact that if you look at this low, we've made a higher low and also a high and a higher high. So in terms of short-term bullishness, there's no doubt about that. In addition, there was a trend line that was broken here, where we also went above it, which people are saying, okay, this is a big breakout. This is the start of a new bull market. The problem is I've seen many markets during bear cycles do this exact thing. And we've seen a market that comes back to the lows and even makes new lows. And so again, that's the problem I'm facing here, is that to me, until I see some of the other factors align, to me, this is not a bullish breakout of a bull market or a new bull market. The other thing I would just like to point out, like, for instance, if we go to a chart of Alibaba here, right? So Alibaba, by the way, the Chinese stocks have had a tremendous rally. But just to give you an example of what I'm talking about, take a look at this trend line. So this trend line is from the all-time highs on Alibaba. You hit it here, and down here, and then you broke out. Well, this is kind of where we are on the stock market right now, this breakout. But then look at what happens. We actually came down and made new lows on Alibaba. And so this is, and again, I'm just bringing up this stock, but you could look at a lot of stocks, and a lot of them do have this similar breakout, and then they fail and come back and make new lows before we get another big bounce. And so if we go to the S&P 500, to me, what does that tell me? Well, if we're going to head back down and we're going to make a new low, where is your likely target going to be? And that would be this trend line right here, which was your pre-COVID high. So to me, and this probably plays out over the next 2 months, I would say. And I think, again, we're maybe even starting to see that weakness creep back in. We've seen all of these kind of former meme stocks run very similar to the top in 2021. I think this is an interim top inside of this bear market, and probably within 2 to 3 months, we're down to this trend line at around 3,400 on the S&P.
And, would that be that rollover? Do you think that's the ultimate bottom and the base that we're going to find for this cycle, and then slowly start working our way up? And then maybe that dovetails with the Fed now cutting rates, but pausing on rate hikes later this year.
Yeah, so that's a great question. And I'm kind of stuck between a rock and a hard place here, because I think that you will get a significant bounce off of that. But I also think that we have to have a reversion to the mean, right? So again, we've had this market where we've been in this bull market that you could argue is artificially inflated because of Fed printing of money. And they finally stopped printing. So we're starting to revert back to the mean. And if I show my chart again on the S&P 500, we have this longer green trend line that actually goes all the way back to 2009. And you can see it basically hits every low. The only time we pierced it was in the panic of COVID, because we were literally, there were people there that thinking the world was going to end. So it was massive panic. But that would be kind of my ultimate target on the downside for this cycle, at least in this period over the next 12 months. So I do think after we bounce off this 3,400, you probably have one more flush down to about 3,000. And I think the key is to keep in mind is that if the Fed is really going hard nose on inflation, then it makes a lot of sense that we have to come back to where the trend line was that is kind of the longer term trend of the market. Even though that market did have the QE in it, we've still got to come at least touch that trend at 3,000 on the S&P.
Oh, wow. Let's talk about Bitcoin, because, Bitcoin was moving pretty strong as well. And then the alts were following, and we're seeing different alts pop off here and there. I swung trade some alts myself. Didn't really do anything with Bitcoin, but, are you seeing kind of the same thing where it's going to roll over? Maybe we go test that 10 to 12,000 or whatever it may be.
Yeah, so as of now, that is what I'm seeing, and I've been pretty, even in spite of so many people bullish, I've had to just stick to what the charts are telling me. And again, it's been a great rally. It looks monstrous, but what I mentioned in the beginning when we started talking was, if you zoom out on the chart, we have to take it into account, right? So here's your big M top, and this was the recent rally. Now, interestingly enough, if we look at this low here in June to the high in August, that's almost the same distance as from here to here. So again, you have to kind of keep it in perspective versus, I know everyone wants to get excited that Bitcoin's headed to 100,000 or higher, but right now it again just appears to be that bear market rally. In addition, there was a classic top signal here on Bitcoin. This is called the topping tail. And this was put in right here. As soon as that happened, that's a note to investors that you're likely going to see a fall. And that's exactly what we've seen. We've seen Bitcoin starting to come back in. Now, I'll give you the technical support levels. Now, I think eventually we break all of these to the downside. But right now, this would be your next support right around 21,300. This is that pre-FFTX collapse where we came up to it and we pulled back, then we broke through. And then if that gets taken out to the downside, you have this beautiful trend line, the midpoint of here with these lows over here. So these would be your next two downside supports. Ultimately, I'm still in the camp that we see 12 to 13, maybe even 9,000 before we really bottom out. And again, there's just so many things in flux, right? If I'm looking at a stock market that's headed to 3,000, that's a 33% decline in the stock market from where we currently are. It's hard to imagine somehow, a risk asset like Bitcoin currently is not seeing a drop back down to 12 or 13,000, maybe even sub 10.
And we kind of have some catalysts for that too, where yesterday the SEC came out, they're targeting crypto staking, and it sounds like other agencies are ramping up as well, and looks like they're going to take some enforcement actions. There's a lot of investigations going on. What is your thoughts with that, and the narratives forming as well?
Yeah. So I think that's part of it too, right? You have the side where you have risk assets, like let's say the economy spins into a recession. The Fed, maybe inflation is still too high for them to actually cut rates versus going to neutral. That's also going to be a tricky thing for the stock market. That then a stock market sell-off is negative for crypto assets in general. And then you obviously have this regulation stuff, which again, this is stuff that it's going to make investors in crypto uncomfortable, right? I mean, we don't know the end game. We don't know the rules yet of what's a security, what's a commodity. And so all of these type of things absolutely will throw that extra bit of uncertainty into a crypto market. And very easily you could see a dump out.
For sure. So I know I ask you this question all the time. Is there a point in this year that you're going to flip bullish? Maybe is it when Bitcoin tests that 10 to 12K range or whatever it may be?
Yeah. So one of the things that I do, and this is just being super honest with the public, is that, even though I think it's going to 12 to 13, maybe 9, it's not like I'm waiting with my cash to buy at 9, right? I'm smart enough to know that I'm not smart, meaning that I don't know the exact low. And so what that means is that when it was in the 17 range, I picked up a 1/6 position, meaning that it was 1/6 of the bag that I want to accumulate on Bitcoin. And basically what I said to myself is every 2,000 to 3,000 down, I'm going to just add another 1/6 until I have a full 6/6 position, right? And so I think that's kind of where I am right now, is that ultimately I do expect potentially to go as low as 9, but I don't want to be left with nothing in the Bitcoin bag if it doesn't get there. And so that's really where dollar cost averaging. I mean, once you get down in the sub 20,000 level, you're now really close to the lows. I mean, even if it goes to 9 from 15 and change, which was the low, that's in the scheme of being at 69,000 all the way down to here. It's not that big of a move anymore. So I think investors, I always say that because I don't want investors to just be like, oh, I'm only buying at 9,000 or 10,000.
Right.
You kind of have to start to say, what's my long-term thesis on Bitcoin? Is it bullish? And if so, then you just basically have a game plan as it comes down and you execute that game plan.
For sure. So, as far as 2023 outlook, we're still not out of the woods yet. Still maybe some max pain that's going to happen. But are you optimistic for 2024, given that, look, it's a presidential election year, the Bitcoin halving, rate hikes will most likely be paused by then. Are you optimistic for 2024?
I am. In fact, I do think that there's a good chance we bottom out in 2023. I don't know how much upside we'll get in 2024. Depends on what the regulations are, obviously, and stuff like that. But I do think there's going to be a pivot in Bitcoin specifically, where investors will start viewing it as a safe haven versus a risk asset. And I think that finally comes in. My guess is when stocks become very unattractive because we get in a long-term bear market, if you will, an economic recession that the Fed can't print us out of initially, then I think people start saying, okay, well, stocks keep making a little less money, so earnings are going down, therefore valuations have to keep coming down. Where do we go? And if you can get regulation and it makes sense, and if Bitcoin is spared a lot of that regulation, then I do think once there's clarity in crypto, then you start to see money flowing into Bitcoin as a safe haven, and that should happen in 2024.
Yeah, it seems though that the narratives are being built to raise the debt ceiling again, and that means they're going to have to print money again. Yep. So it seems like it's going to be they're going to go back to the status quo at some point.
They
Because
always do,
always,
unfortunately, right? I mean, the thing is, it's the near term pain of going through a really bad depression, or it's just print more money to kind of push it off till another day. And we all know it's unsustainable, but that's what our government has done, and that's what the Federal Reserve has done. The Fed always tends to err on the side of what politically is, even though they're not supposed to be political, they err on the side of less pain now versus, who knows in 20 years if we go into a depression because our currency collapses at that point, we'll deal with it then type thing. And again, as someone who's not super old, it makes me a little nervous, especially for my kids. But yeah, it is what it is. And our job is not to dictate their policy. It's to make sure that we prepare ourselves by trading and buying certain things like Bitcoin.
for sure. Any thoughts that you can share on the real estate and automobile markets with, valuations there and how things have been progressing?
Yeah, so I do think, I mean, one of the things in the auto market is that we have repossessions going up and auto loan defaults really skyrocketing. And I think that to me is the beginning of something bigger on the horizon. So we keep on seeing these jobs numbers come out that are pretty solid. I do think eventually we're going to see a pretty nasty decline in those jobs, and ultimately that'll lead into the recession. And the same thing with real estate. I mean, if you think about the costs that have gone up, I mean, the plumber, the carpenter, the wood, the metals, everything that goes into a house are raising the costs of building homes. And then you have interest rates that have soared to, 30 years at 7% now or some crazy thing. And it's really making it hard for people. So for instance, in my area here in Florida, there's basically no action going on in the real estate market anymore. It's ground to a halt. And you don't have people really dropping their home prices just yet, but that's the next stage. So I think we are in the beginning stages of a bear market in housing, automobiles. I think the same thing. I think overall, people loved having extra money during COVID. They bought a new car. You're coming out of that now, and that's going to be problematic. So I think used cars prices are going to continue to decline sharply, and even new auto sales will decline pretty precipitously too.
Well, if you got cash on the side, it'd be a good time to go.
That's what it is. And by the way, I just make that point. It's a great point you just make, is like, so, everyone always wants to be fully invested. But the reason to have some cash on the sidelines is that when you get opportunities, you can jump on them. And I do think that the next 12 to 18, maybe 24 months, there are going to be amazing opportunities out there for investors that have cash on the sidelines. So I think that's really important to remember.
For sure. Gareth, always great stuff, man. Thank you so much.
Always a pleasure. Thanks for having me.